Swaps have got 40 priced, which means 50 is priced. What message does 50 send to the market, to the global economy?
I think the key message is the extremely dovish reaction function of the Fed. That has been the message since December last year. That was the big impulse we got last December. And it would be a reiteration of that at a critical time. And I think that the best playbook would be like we saw in December, where we saw this really surprisingly dovish pivot from the Fed. We saw 10-year yields actually rise in the following months because it said that they were worried about the economy, they were going to boost the economy, and they were complacent on inflation, and ultimately it was supportive for risk assets. So that is the main takeaway if they do 50 basis points today.
Mark, the economists, your favourite people, say they're going to go 25. What does the market do in that environment?
I will give the economists a little bit of leeway here, that I think a lot of their forecasts have been potentially put in before the communication of the last couple of weeks. If you asked me 2 weeks ago, in fact, I was asked in the show 2 weeks ago, I thought it was going to be 25 basis points, but I said it was still in balance. But many people out there believe that the communication in the last couple of weeks has been deliberate. Now, whether that's true or not, it doesn't matter. But now that we're pricing in 40 basis points, it would be more damaging today for the Fed to not deliver what is priced. And I think that as someone who doesn't think the Fed needs to cut aggressively, but they can't be whiplashing back and forth. I think the most positive message they could do now is deliver 50 basis points, saying it is about being proactive and preemptive, not because they're panicking, not because they're worrying. So it's true that officially the forecast is most economists don't expect 50, but I think some of those forecasts are a little bit stale.
So I suppose what you're saying is, what was the point of all the plants in the Wall Street Journal and the FT if they're not going to cut by 50 basis points today? And yet, if you think that the Fed's going to cut by 50, you don't see a recession. So how do they handle the messaging?
So I think we need to emphasise we don't know that there are plans. We don't know that's official kind of Fed communication. But I think that's a large perception in the market. But yes, given that there's a perception in a large part of the market that the communication, the guidance on pricing has been fed by the Fed itself, the Federal Reserve itself. Therefore, it would be disappointing if they suddenly didn't follow through right now. But I think that it's possible for them to say, hey, look, we see the softening in the labour market. We think inflation's under control, and to present a very powerful image. Like message that, hey, this is them being proactive rather than panicking. But it does, again, send a message of an extremely dovish reaction function. That is positive for the economy. It extends the economic cycle, but it does fuel future inflationary worries. It shows that this is a policy that is much more, or a committee that is much more like that under Arthur Burns than under Paul Volcker. And ultimately, that will create longer-term inflation worries that people will be concerned about, and hence the curve will steepen aggressively.